Here. Hope I was doing outstanding. Friday, December 20th, 2024, 9 a.m. Talk really quick about the market. Some names I'm looking at go from there, but take a look at the S&P futures. Still in the red here this morning. Uh, Markets kind of squeezed out a mixed session yesterday. S&P opened in the green, gapped higher, found highs about 950 or so, gave back some of the gains, and then chopped around for most of the session. And a late session pull pushed it slightly in the red. The Dow squeezed out a slightly green close, so ending its 10-session losing streak, its biggest losing streak in 50 years. And here we are. And I was talking about on the rant yesterday afternoon. As much I'm a glass half full kind of person, right? So when I look at the markets, I'm always thinking of a bounce or getting some lotto calls as opposed to getting put. So it's kind of tough to shift your mindset, right? I used to I always say, you don't go tell your neighbor, hey, I'm short the market. You don't go to a holiday party and tell your coworkers, hey, I'm short the market. I hope it tanks, because everybody's vested in the market. Well, most people, right? You have your 401ks, your mutual fund, whatever it is, your funds. So, and not only that, as markets tumble, usually asset prices do, housing, home values, things like that. So it's a tough thing to wrap your head around to go against what you don't want to happen, right? Because you don't want to see your assets lose value. But at the same token, it's a market; things go up and down. So anyway, so yesterday afternoon, looked like the market, couldn't break that 50-day moving average on the SPY 591 and change. Pretty much hit that line and then just pulled back, and then we sold off into the close. I'm like, if we break 585, just not a good thing here. So sure enough, we just melted lower overnight, and I think there's just more digestion with the Fed Chair Powell comments. I mean, the economy, all the data continues to be strong. We just had PCE data this morning, which came in lower than expectations. So just concerns about their normalizing. Where do rates stop getting cut? And then they raise their targets for inflation. So you wrap that all together. I think the market's just digesting that, and hopefully we can find some footing. SPY can get over 585 today would be nice into the weekend, and then maybe we can embark on that little Santa rally. But we've seen this over and over again when we've had these sell-offs. Then typically a couple days or 2-3 days, even sometimes one day, then the next day there's a gap down, and then that gap down has some kind of, I wouldn't call it capitulation, but you get to a point where all of a sudden we bounce and then it reverses, and the next thing you know, we're in the green, and it turns out to be a great session if you have lotto calls, right, and you're out of your puts. I don't know if today's the day, but I kind of get that feel. So I'll be watching market as SPY's kind of giving back some of its gains from its PC data infused bounce. So we'll see. Maybe we get back down to 578, 578, 579 on a SPY, and that could be like the trigger point. If we start to bounce again, I'll look for some spec calls. Also, today is triple witching, right? Or is it quad witching? Maybe it's triple witching. Is the end of? Oh no, it's not. Well, either way, supposedly there's over $6.6 trillion of notional value of options expiring today. So I'm certainly there'll be some swings or some shenanigans, but certainly something to be aware of. Some are saying it's more than 6.6 trillion. It's like 7.7 trillion, something like that. But what's a few trillion amongst folks, right? Just kind of throw out any number out there, right? Don't matter. So anyway, so on the SPY, just want to see that 585 reclaim today would be nice. I mean, obviously, if we can get back over the 50-day moving average at 591, that would be a huge accomplishment. But maybe that has to wait till next week. And then just things of note too, the 10-year yield hitting highs over that May level, just pretty remarkable. I think mortgage rates are back. The 30 years back over 7%. I mean, that escalated quickly. The amount of stocks over their 50-day moving average, it was up. It looks like one stock moved back over its 50-day moving average yesterday in the S&P. So out of the 500 stocks, only one traded back over its 50-day moving average. The other 499 either stayed above it or below it. Just pretty remarkable. And then last but not least, these small caps. Just, IWM back to 220. Just hard to see it here, but to me, you look at the pull and it happened quick, but I think it opens opportunity, right? The opportunity to reset and then play some moves to the upside. All right, now individual names, and first I'll talk about the hedge plays. And Shopify app opened higher yesterday. It was like 111 and change. I'm like, I might have to close the last of my puts, and then sure enough, it reverses course. by mid-morning, or quick in the morning, I was able to close some more of my puts out for nearly 1,200%, and then I just held on to the last. And I was looking to close them at the end of the day, but then you start looking at the chart, and it has that 106 level was the low from earnings. I kind of look as I'm like, if it breaks under that, I think there's a couple more bucks to the downside. So held into today. We'll see where it opens. I mean, it's at 104 and change right now with 25 minutes before the bell. I'll probably just close those in right at the open or right shortly thereafter. Probably not going to revisit, but a nice hedge trade. Thankful to have found something kind of in that scramble Wednesday when the when the SPY was breaking under 600 to find a decent hedge position that'll help offset some of the calls and hopefully then some. So that's Shopify. Broadcom, which was looking, so I was able to lock some of my Broadcom puts in Wednesday before the close to cover costs. And then it was kind of just muddling around the 220 handle for most of yesterday before finding some pressure closing at 218. And it was looking great this morning in the pre-market at 212. And then it's just melting higher ever since. Looks like Morgan Stanley raised their price target on Broadcom. I mean, it's not like the stock isn't up from 179 bucks a couple days ago. So a little late to the party there. So I don't know if that's some of the reason it's bouncing here. But if we do get weakness at the open, I can see it reversing. I don't know what the rest of my put's going to open up, but I put on the watch list. I was going to close the last out at the open because it was trading at 214, 215 when I started to write the watch list. Here is at 220. We'll see what happens here at the open. I also got those Palo Alto spec puts right at the end of the day. It's trading right at its 50-day moving average, 190, 174 or so, and then closed under it. So went and got those puts as kind of like another inexpensive hedge just into today. It was down at 185 this morning. So my puts would have been near in the money, and now it's bouncing. So it's about 187 here. We'll see how it plays out and what my puts open up. If they open flat, I'll probably just close them out, cover costs. If they're in the red, I'll probably hold them. If they're in the green, depends on how much. And the plan was to lock some in to cover costs and ride the rest and use it as kind of my spec lotto trade today. We'll see how that all plays out. So now on the flip side, and then some of the names, of course, that I've been bullish on and in the call side have taken on the chin. I mean, Block is one of them. Just 5 days ago, it was knocking on the door of breaking over $100 and holding, and now here it is trading on it was 85 in the pre-market earlier. Just going to be patient here. I still think it's going to trade over 100 into 2025, but it would be a name I'll continue to watch. The 50-day moving average there is 83.23. Got down to 84.75 in the pre-market. Not much to do there. Joby, it's funny, it was only down 3% on Tuesday's massive sell-off. And in yesterday, we have a flat session, and it's down another nearly 9%. 775, that key spot. So silver lining, still those April strikes continue to get cheaper. Today might be the day I finally grab some. Similar Peloton, and you look at the Peloton chart, it was only down 2% yesterday, and overall still looks pretty strong here. So probably wait for it to get back over into the 10s and into the 11 hand, over that 11 handle before I add more strikes of those January calls. And then on the flip side here, and then if the market does find pressure, and maybe this is the start of something bigger, just some names, and I already had one of them on the radar already, but Deckers, right? So Nike had earnings after the close yesterday. A nice quarter, but then I guess the new CEO wasn't able to give this picture of a turnaround, or at least happening quickly. So I think that's some of the reason why the stock gave back some gains. Kind of annoying there. But if anything, I think that opens an opportunity here on Deck, right? So Decker's a name I used to trade back in maybe 2012, 2010, 11. Things that before I think it had 6-for-1 split just recently, 3-for-1 split a while ago. So you look at it now, it's a $210 stock or $200 stock. But you take the split side, you can do that with any. So you can do that with Apple and say, hey, Apple's a whatever stock, or Tesla or Netflix. But I haven't traded in a while. So now you start looking at, I was kind of thinking things over yesterday with the Nike earnings too. And you have to think a lot of these companies get their materials from China, from all these places that there might be higher tariffs, right? So, and most companies in the apparel industry and sector and make sneakers, those are high margin products because of the cost of labor and then the cost of materials. And if those material costs just rise just a fraction, those margins that these companies are priced, some of them priced for perfection. We have a Deckers trades 8 times revenue, 9 times revenue, something like that. I think there's an opportunity. So don't be surprised if I add some I wouldn't call them spec lottos, but some possible puts into 2025 on Deck, just as an overall kind of like a hedge up for the market just in case. But I think it could fall on its own merits anyway. That's Deckers. Deckers Outdoor, right? And then Also, Intuit's back on radar here. Closed under its 50-day moving average yesterday. Uh, tried to trade that or was watching to trade it for downside a couple weeks ago. Found a bounce, and now here it is back at that key threshold there. So 632 is the 200-day moving average. If that breaks today, don't be surprised if I add some puts to play for a move down to 590, 600 or so. And like I was saying a couple weeks ago, I don't have to get the 610 in the money or close to the money. I think further out will pay. If you get the 580s or even the 590s, depending. Uh, if it gets to 600, the 580 is going to be a couple 100% at least. So that's it, folks. Let's have a great day. We have about 20 minutes to open. Rock and roll.